Hello and welcome. I hope that you are having a fantastic day. Today we're going to talk about cryptocurrency news. This is a special tax report. United States, and it's specifically for the United States. I unfortunately don't have information for you if you live in another country. I know that many countries such as the United Kingdom does their crypto taxing in a similar way. But if you're not in the U.S., you will need to get information specific to the country or the region that you live in. How is cryptocurrency taxed? I am not a financial advisor. This is not financial advice. This is my opinion. I'm not smarter than you. You are smarter than you realize. Do not trust what I say. Do your own research. And so when it comes to taxes and taxation, I also am not a tax professional. This is not tax advice, and it is not designed to meet any individual person's needs. What I am going to be sharing with you, though, is general information that has been put together by a Zen Ledger, which is a company who does cryptocurrency taxes. And so I've used Zen Ledger for my 2018 taxes. I'm going to use Zen Ledger for my 2019 taxes. And what they do is they go out to your cryptocurrency addresses, your cryptocurrency wallets, the cryptocurrency exchange accounts. They gather all of the information together so that you can properly handle your capital gains tax. Now, there are other companies out there that provide the same and or similar services to help you prepare for your cryptocurrency taxes. I'm not familiar with the other companies because I have not used them. Zen Ledger is the only one that I've really used and looked into. And so that's kind of where that's at. But I wanted to let you know where the information came from. I'm going to provide a link to this article. That way, if you want to get more information about Zen Ledger, or if you want to read this article more closely or follow any of the links in the article, you'll be able to do so. Now, if you're watching this, say, on Twitter or Facebook or some other social media, you'll want to click the link where it says YouTube in the video so that you can actually go to the YouTube channel and then look in the descriptions, and that's where the link to this article will be. So, enough of all of that. Kind of like this picture that they chose. Cryptocurrency has become a popular alternative asset class for long-term investors and a volatile asset for short-term traders. Despite its growing popularity, the tax treatment of cryptocurrencies is complex and ambiguous. Now, I definitely found it complex for doing our 2018 taxes, so you want to allow yourself enough time to prepare your cryptocurrency taxes depending on how much trading. I mean, if you bought one cryptocurrency and you sold one cryptocurrency during the year, it'll be easier. But if you have lots of transactions, you may find it very complex. The IRS clarified some outstanding questions last year, meaning 2019, but many questions remain, and it's important to ensure everything is done right. Let's look at how cryptocurrencies are taxed and how you can ensure that you're paying the taxes you owe and nothing more. And so all of us can agree that we only want to pay what we owe and not a penny more. Cryptocurrency is property. The IRS treats cryptocurrency as property as opposed to currency for tax purposes. As with stocks, bonds, or real estate, you must pay capital gains or losses and pay the appropriate tax rate. These tax rates depend on how long the position was open. For example, the time between buying and selling, and your individual tax bracket during a given year. Ordinary income tax rates apply if you sell cryptocurrency within 1 year of buying it. In general, and that's the key thing here, this is in general, these taxes are significantly higher than the tax owed by long-term holders. So this little spreadsheet, this little diagram, goes down whether or not you're single individual, a married individual, head of household. It talks about how much your income was for the year for 2019 and what your tax rate will be that you would apply to cryptocurrency. Capital gains tax rates apply if you sell cryptocurrencies more than a year after buying it, which is typically lower than the tax rates a short-term holder. So this is the same sort of spreadsheet with the different rates. Now, these are 4 types of taxable events. Now, this is the important part because this tells you what you need to keep track of in order to do your taxes correctly. Converting a cryptocurrency to a fiat currency. So if you already own something and you're turning it into cash, you're turning it into US dollars, that's a taxable event. Exchanging one cryptocurrency for another cryptocurrency. So you've gone out to an exchange and you bought Bitcoin and now you're going to trade it for Ethereum. Using cryptocurrency to purchase goods or services. Yes, if you bought that Lambo with your Bitcoin, you have to pay capital gains taxes. And earning cryptocurrency as income is also a taxable event. So there's also some notable non-taxable events, and that's when you give away or gift cryptocurrency, when you're transferring cryptocurrency between exchanges or wallets, and when you're buying cryptocurrency with US dollars. The tax treatment of cryptocurrency applies to all types of transactions, even if you spend crypto on everyday items such as a cup of coffee. The IRS requires you to record the transaction, calculate the capital gain or loss. There are no exceptions for transactions below a certain threshold or types of transactions, at least for now. Now, the at least for now is an important part that they're making note of because after this blog post was written, a proposal was introduced to the United States Senate to allow taxing of cryptocurrencies. In other words, if you had a thing where you're buying coffee, and as long as the cryptocurrency you used to buy the coffee, that exchange did not show $200 in profit, then you would be tax-free. But that has not been passed into law. Currently, that's just a proposal that's in the U.S. Senate. And if they make that law, then that would be great because then you don't have to track your coffee and your hamburger and your other purchases that you made as long as that purchase did not create $200 worth of profit. So if the transaction is less than $200, it should be non-taxable if this law goes into effect. And if it is above $200, then it might be taxable depending on how much money you made with that cryptocurrency, how much profit was in the crypto that you sold for that particular transaction. In other words, if you're buying your Lambo with your cryptocurrency, then yes, you're going to incur a taxable event even if this law passes. So if you're interested, if it's important to you that you don't get taxed when you buy coffee with cryptocurrency, you might want to call your U.S. Senator and say, hey, I'd really like to see, I forget the law number, I think it's H.R. 5225, but I'll put a link to the law. There's a PDF that you can download for the law that's been proposed, and I'll put a link to that in the description below so that if you're interested in learning more about that law, you can do so. Every transaction matters. The process of calculating capital gains or losses involves determining the cost basis for each transaction. In other words, you need to know how much it costs you to open the trade in order to calculate the profit or loss when you close the trade, including any fees, commissions, or other acquisition costs expressed in US dollars. All right, so that's a lot of information that has to be tracked with every transactions. Now you must record 4 pieces of information for each transaction: the date and time, your cost basis, and the fair market value of each unit at the time it was required, the date and time the unit was sold, exchanged, or otherwise disposed of, and the fair market value of the unit when sold. Now, airdrops and forks are taxable. So if you have a cryptocurrency address and you get somebody who just simply donates or sends you money, that's a taxable event. Or a hard fork where maybe you own Bitcoin, and Bitcoin, the people who made Bitcoin, the software that's out there for Bitcoin, somebody decided to take that software and they're going to go out there and create a brand new cryptocurrency. They're going to start up Fred's Bitcoin or whatever they decide to call it. And you suddenly at your address have Fred's Bitcoin and the regular Bitcoin. All of a sudden that fork is a taxable event. And so this is another reason why as a owner of cryptocurrency, you want to keep on top of what's happening in the cryptocurrency industry, because you could have had a taxable event that you were not aware of, and the IRS can make you legally responsible for the income, even though you may not have been aware that you actually had that income. The tax treatment of airdrops and forks have been ambiguous. That's very true. While the IRS finally issued new guidance last year, the new guidance still left many questions unanswered. Cryptocurrency mining is double taxed. So if you're doing any kind of cryptocurrency mining, you're going to pay twice. So cryptocurrency mining has become less common as professional operators have displaced individuals, especially for large cryptocurrencies like Bitcoin. That said, there are still many individuals that mine lesser known cryptocurrencies in the hopes of becoming rich. These individuals may be subject to double taxation when mining new coins. So the bottom line, cryptocurrencies have become a popular asset class, but taxes remain a complex and ambiguous topic. While the IRS provided some new guidance, traders and investors should ensure they're using the right software to automate the calculation of capital gains and losses, as well as consult with an experienced accountant to ensure everything is done right. So that's the conclusion of our special report. If you have any questions, leave them down below. Again, I cannot give you personal tax advice because I am not a tax professional. And so if your question regards that, I'm going to direct you to find a good CPA or to speak with the Zen Ledger, which I will be providing a link in the YouTube description below. In the meantime, I hope that you'll like, subscribe, and hodl. Have a fantastic day.